The Upside and Downside Gap Tasuki, presented by finvids.com, Finance Videos. First day of the Upside Gap Tasuki is a large bullish candlestick. This is followed by a gap up and a small bullish real body candlestick. The next day is another small body candlestick, but this one is bearish. It's important that the close is in between the gap. The Upside Gap Tasuki is a bullish continuation pattern, therefore it should occur after a prior uptrend and suggests a continuation of that uptrend afterwards. The psychology of the Upside Gap Tasuki is as follows. A bullish candlestick continues the uptrend. The gap up is another bullish sign. The two small real-bodied candlesticks are an area of consolidation after the gap. Gaps usually act as support during an uptrend, and so the bearish candlestick should be using the gap as a support to continue higher. The Downside Gap Tasuki. The first day is a large bearish real body candlestick, followed by a gap down. The next candlestick should be a small bearish real body candle. The third day is a small bullish real bodied candlestick that closes in the area of the gap. The Downside Gap Tasuki is a bearish continuation pattern, therefore it should occur in a downtrend and suggest the continuation of the downtrend. Psychology of the pattern is as follows. The bearish candlestick is a bearish sign. The gap down is another bearish sign. The two small-bodied candlesticks act as consolidation after the move downward. A gap should act as resistance during a downtrend. The bullish candlestick on the third day uses the gap as resistance, and the resistance should hold and prices should continue downward afterwards. Example of a Upside Gap Tasuki is given on this chart of the Nasdaq 100 ETF. There's a large bullish candle followed by a gap up, small bullish candle, and then a small bearish candle. Notice that the low of the small bearish candle is using the gap as support, and prices continue moving higher. The chart of the silver ETF shows a downtrend followed by a bearish candle and a gap down. The two consolidation candles use the gap as an area of resistance. The area of resistance is held. However, prices move back up and test that gap, but the gap continues to hold. For more details and description, please see the charts and information below the video at finvids.com. In summary, the Upside Gap Tasuki occurs in an uptrend and is a bullish continuation pattern. The first day is a bullish candlestick followed by a gap up. The second day is a small bullish candle followed by a small bearish candle that uses the gap as support. The Downside Gap Tasuki is a bearish continuation pattern. The first day is a bearish candlestick followed by a bearish gap down. The second day is another bearish candlestick. However, the third day is a bullish candlestick that uses the gap as resistance for a further move downward.